Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
These are a few different ways. Down 11 pips on this one. That's okay. I look at the market a few different ways. I use something called a time frame correlation, and what that means to me is I have to have three different time frames all tell me something that lets me know, where the market's going to go, where it could potentially head, and then a potential stop loss area. I go off of a lot of structure or market structure and institutional structure, um, using something called quarters theory. I'm not going to go deep into that for you guys, but I've got a chart or two marked up on TradingView that I'll show you guys as well this morning as we look for some trade setups. Let's see here. All right, so something just popped up on Euro USD on the 15-minute chart. What? Probably about 5 minutes ago. So we'll take a look at that. Now, the way I use AIRO, guys, is a little bit different. Okay. We're in the money zone, and here it says short. I know some of you guys may use a different strategy, maybe like bag or something like that. Sherpa is very similar to bag, um, which is phenomenal. I told Nate that before. I like bag. It's very similar to Sherpa and stuff like that. I just use a few different confluences. So, for instance, right now we're in the money zone. We see it shorted off of the resistance bar. This is what I call it, the resistance zone up here. We've got a triple top, 0.1, 0.2, 0.3. So how I look at this whole structure, guys, I know with bag, it tells you to take a zoom out image, right? Or take a look at the bigger picture. Since this alert comes from the 15-minute chart, my bigger picture would come from the hour. Definitely the hour, and that would give me the structure that I would need to follow or pay attention to for at least the next couple of hours if I'm going to take a 15-minute trade to scalp or to trade binary with, right? Another thing that I use is something called Elliott wave. So since that alert came in on the 15-minute chart, my structure, all right, the three time frames that I look for with Sherpa, I've got a structure chart, I've got a entry setup chart, and then I've got a price action entry chart. Those are my three time frames, and each of those time frames are going to be telling me something different. So I have to get my structure together on this Euro USD, and for me to understand that, I always start with, like I said, the bigger picture or the most recent trend, I should say. So the most recent trend for me would be from this low to this current high up here. All right. And so what I want to identify within this trend right here is something called Elliott wave. Okay. Some people like Elliott wave, some people dislike it. Honestly, it's kind of like I would say almost an advanced technique to kind of learn. It takes a lot of studying. Um, I've been studying it now for maybe 5 years plus now, and like I know enough to be comfortable with it to use it. Okay, so the first thing that I look for when it comes to Elliott wave is my retracements. Those are waves 2 and 4. So starting from this push right here, right before this sideways motion, I would consider this wave 1 with a sideways wave 2, a wave 3 with like a diagonal wave 4, or you can even say another sideways wave 4, before finally a wave 5. After a wave 5 push, there's something called an ABC retracement. We are now in the current C leg of that ABC retracement, and as long as this C leg of the retracement does not break the low of this wave four, then you're looking at again another potential buy setup. But I know Arrow is saying going short right now. So here's what I do with this. Let me go to trading view so I can show you guys what I do with this real quick. Nope. All right. So here we are on trading view, guys. We've got this marked up already a little bit, right? So these yellow lines right here are, let me get that off of there. These yellow lines right here are institutional price points based off of something called the quarters theory, which is what I use as part of structure for the Sherpa. All right. Now, this area right here is the same area as AIRO where I started my count from. I'm sorry, no, it's not. Let me go to the hour. This is right here. All right. So we went from right here to up here. Let me point this count out to you guys. That's my Elliott. That's my 5-wave Elliott push up. After that, we see an ABC retracement. Okay. This yellow line right here, if you guys notice, the price point that is at is $1.22, 200 pips even. Quarter theory uses a lot of whole round numbers to signify important price points in the market. This zone up here with this thin hash line is actually a quarters level. Okay. So this is a strong market area or market structure area of resistance right now to this bull trend. So what I expect to happen, what I expect to happen is after this ABC retracement, with it being almost 9:30 in the morning, there's a lot of pre-dealing, something called the pre-dealing hour. It's between 6:30 and I believe it's actually 9:30, where the brokers themselves will actually do a lot of dealing and willing and dealing pre-market, okay, before the retail traders like me and you even get a chance to even like know what's going on. So there's certain setups that happen within that time frame. So right now we're at this support level that's not looking like it's going to break below this level of or this structure of wave four to signify that it's going to be an actual trend reversal for me just yet. So what I expect is for it to find some type of support, do a pop-up session for us, right? So at that time, what I would do, I would fit from this high to this, wherever this current low is going to be set at, and let the market retrace a little bit, and then pop my entry for that short, okay? So let me check a few more things real quick. Because I'm not saying Arrow is wrong by any means. I follow Arrow. There's been a few times where I've went against Arrow and it's smacked my hands a couple of times like no, don't do that. So we will definitely go off of 1 hour structure. I want to see this pop up that is currently happening happen. 1 hour structure, 15-minute setup. Okay. So here's how we do this. I know the bag strategy calls for like a 40 pip stop loss, but sometimes I don't use that full stop loss. Now I know this is the current low, and this may or may not be the proper anchor for this low point on the fib, but I feel confident enough to think that this may do a pop up and retracement to a minimum of the 382 retracement before popping down. Now, granted, there is a lot of structure. Where's my favorites? Oh, granted, there is a lot of structure. For instance, this right here, and you got this bounce, and then you've got a break of structure rule, something that I'll give you guys later down the road. Okay, a 3 candle break of structure rule, and so I like I said, I expect at least a retracement or a pullback to something of this level. at least to 382, which will give us the fake out or the stop hunt, the enticement for non-educated traders to go long before they pull back and kill your account. That's how I look at the picture or the markets. Okay. So do I think I should enter in this short just yet? Not just yet. Like I said, I want to see this pullback finish. And since it's happening or looks to be happening, we'll wait for the 9:30 candle to happen or the next 15-minute candle to happen. And then after that, I go to my third chart, my price action entry chart, right? So since the 1 hour is my structure, the 15-minute was my entry setup. I'm looking at my entry setting up. I'll go to the 5-minute or even a 1 minute if I wanted to, and then bang that short that arrow was giving me earlier. Okay. And the reason why I agree with AIRO is because again, on the 1 hour, we are in the C leg. And even though this is a C leg at support, there's not a huge change of momentum to the bull side. There's not a short change of momentum to the bear side that failed to break this low to create that higher low for me, which would warrant me to go long. So for now, we're going to follow arrow, continue this trend because this whole C leg, honestly, could come down to this zone. Okay. And if you guys look, my TPs are this 272 and this 618 right here. Those are always my first and my second TP. So if it does continue to C leg down, my TP is right here at the top of my entry zone to go long. My second TP is in my entry zone to go long. Does that make sense to you guys? Let's see. Let me see what you're talking about. Got you. 1 hour alert and 15 on EU. Yeah, I got you.
Hey man, these cats are
Yes,
already
sir.
talking about me, man. They say your first trade look like it's gonna be EU. They know I hate EU. You gotta find somebody who loves EU. It's not me.
Oh
No,
man,
it's not me.
honestly, guys, I don't have like a favorite. I promise you, I don't have a favorite. I'm a very technical trader. I trade the setup. So and the system that I use, it allows me to do just that. Like I don't even like to define myself as a swing trader. I trade the setup. So I could be honestly a scalper one moment, and on another chart I can be a position trader. So the system is just like that. But yeah, I haven't traded EU in a little minute, honestly. That's just where I started.
Yeah, I can
So
have
we
that.
can, yeah, I know, right? So we can kind of see, like I was saying, guys, I expect this to pop up, right? So we want to see this momentum pop up. This is absolutely perfect. This is absolutely fine. Okay. Um, Along with this pop up, though, what we eventually want to see is it to find its resistance for it to hit that ceiling, probably around this blue line, maybe around the 382. And honestly, if it wanted to, it could come a little bit deeper. Okay. Because like I said, I like the deeper retracements. I believe EU does do a lot of deeper retracements, at least into the 618 and the 50, which I don't really use a 50. But this is what I'm expecting to happen, right? I'm versed in I guess the movement in the cycle of the market, which allows me to expect this movement to happen. So now I'm prepared to enter in my short. There's a couple different ways that I like to enter. More times than not, I try to enter off of pendings. Those take away all the emotions. You set your parameters and you go. Versus market execution, where you kind of have to, look at this chart, do some chart work, and then just like keep an eye on it because it's not ready just yet, right? So, like I said, my entry is going to come from the 5-minute chart. Now, what's going to define my entry? Let me get this off of here real quick. What's going to define my entry, guys, is the candles themselves. All right. If I wanted to, starting from this high to this low, again, I could do my Elliott wave count. Okay. That cycle runs on every time frame, believe it or not. All right. I always say there's cycles within cycles. And some people see it, some people don't. With this one, this is how I'm seeing it right now. Here's my A, here's my B happening right now. My C is gonna pop up. As long as this C on this 5-minute chart doesn't break the high of this wave four, guess what? You'll see this corrective double top M, and this area again would be the zone where you guys want to sell at, which is what? That 382, right? It may not even pop up that high though. We've got this structure right here. So, but long story short, we are expecting this thing to do a retracement to fake people to go long before ultimately doing a push low. All righty. So I'm not entering this just yet or anything like that. This is what I'm speculating. I'm gonna go flip on another chart, or answer any kind of questions. Well, until we see this set up for me to enter. No, they say EU. You guys don't like EU. I know it. I'm not a big fan myself. All right, so we'll come back to EU probably on the next 15-minute candle and see what's happening. Let's see. But for now, let's see what AIRO's doing. AIRO on the 1 hour to go short, which is what we want to do. We see this pull back, which is what we want to see, probably to this structure on the 15-minute where we'll pop it to go short. And then the 5-minute, with this moving average, it probably might act as a slanted trend line, which we'll find as resistance, and then we'll go short. So that's what we're looking at on EU, guys. Let's see what else is on here. All right, it was called a little bit ago, I think. We'll check it out anyways. It's like what I notice is AIRO does give you an opportunity to sometimes give you an opportunity to wait for that retracement to happen and then get into the nice price point, which I'm all for it. That was on the 15-minute chart again. So you guys know that my structure is going to come from the 1 hour. Ooh, look at this. It gave us that buy right here. That's wild. That is wild. Here's your bounce. It's your arrows. There you go. Now, here's what I see, guys, on this 15-minute time frame. From this high to this low is going to be wave A. This sideways consolidation is wave B. This is wave C. Okay, after wave C, you've got this bounce out I want to see, and it goes right. If I fib, I wonder if my fib settings are even set up. Nope. Delete you. Oh, another zone. Let's take a look at the hour chart. Okay, I'm still long, guys. I'm still looking at this as a long situation. Even going from this low to this high, I'm still looking at this as an A, B, C retracement, and then this is the next bull move up. Let's see here. We got more green zones in the red. I'm gonna take a bigger picture. Even on the 4 hour, more green zones in the red. All right. Okay, let me go back to the 15. So let me go back to, so this is a buy signal. So let me go to a trading view and show you guys what I see, okay? I like using trading view. I always do my chart markups on trading view for some reason. That was EG. Bingo. All right. Long-term, bigger picture is a long situation, okay? You've got a hit to the low, hit to a half point, and another hit to the low. To me, that is a shoulder, head, shoulder on a daily time frame, which would warrant this to go long. Okay. Not only that, after this tap to the low, this tap to the low, this tap to the low, and then this change of momentum, here's a higher low than this. Here's another higher low than this. After both those higher lows, you've got this change of momentum. That's all on the daily chart. And what I'm doing right now, guys, is just making sure that momentum is on my side pretty much, right? I'm starting from these three taps to the low, change of momentum, retracement. Everything is above the 50 moving average. This current 4-hour candle looks to be like an engulfing type of candle, all right, off of this pin bar. 1 hour, let's check it out. Let me show you guys what I see on this 1 hour again. A, sideways B, here's my C, okay? Notice my C never broke the low of wave 4. All right, from this low, you got wave 1. Let's see, we'll go from right here, sideways wave 2, wave 3, deep wave 4, wave 5. Waves 3 and 5 almost tend towards equality. Sideways 2, steep 4, which is the guideline of alternation for Elliott wave. And then you've got kind of like a complex, or I like to call it a complex wave 1. All that means is it's got its own set of 5 waves within this one wave alone. That's what complex means. Now, using all of that, here's what I'm gathering. This AVC retracement. After the C retracement happens, we have this change in momentum. This is the momentum we want to see. Now, does that mean I'm going to enter blindly on this buy with it? No. I'm a guy who likes to buy things on a discount. I understand that there's going to be a higher low created from this, and that higher low must be created in order for it to continue its uptrend. If it doesn't happen, then guess what? We're going to see some more sell pressure coming in. So how do I know, or where do I judge where to get in on that buy, right? The buy came in on the 15-minute chart. Here's an inside return on this single candle. Even though it's one candle and it hasn't closed yet, I'm not going to use it. I'm going to wait till the 945 candle comes up to where I could fib from this low to wherever this high is created. Let this retracement happen. And honestly, it could hit this 382, which is the top of this structure and the top of the 50 moving average before popping back up. Excuse me. Or it could do a little deeper retracement and come down to this break, to this structure right here. There's something that I use, guys, as part of Sherpa, which is called a 3-candle break of structure rule, which is, I don't even know how the heck I got it. It's just from me just looking at price action in a different, I guess, mind state. But what that looks like for me is so we see this structure right over here. We see the structure right here. We see the structure right here. A 3-candle or a perfect or a clean break of structure for me and Sherpa requires a minimum of 3 candles. All right. And there's a few different characteristics that those candles have to meet. I'm sorry about the dog in the background. I'm outside enjoying the weather. So the first characteristic is, depending on my bias, the momentum of the breaks has to be there. So what that means is this candle was the first candle to break that structure, right? This is the second candle. Notice how big or how bold the bodies are on these candles versus their bearish counterparts at this certain point, right? So this is the first candle that broke above this high. This is the second candle that broke above this high. This is my third candle. Now, once this candle closes, normally I would enter because I understand that, at most, it's going to retrace to test this structure down here and then pop back up. And then my stop loss will go, somewhere below this low or something like that, right? And I'll ride it all the way up to my TPs on my fib. But this is an example of the 3-candle break of structure rule that I use as part of Sherpa. So what we can expect these next couple of candles to be, even if they are bearish, I honestly don't expect them to get back below the 50 moving average, and I definitely don't expect them to get below this blue horizontal line right here, because this is structure that already has the momentum and is gaining control in. So we're at this structure right here, which would, I guess, warrant a lot of people to, I guess, begin to take a short position. But again, if you're not versed in the market, yeah, you may hit that short position, get a few pips, but you're just catching a retracement that's going down to retest this break of structure that it just did. And it's going to pop back up, hit your stop loss, and then drain your account. But so that's how I'm looking at the markets, guys. Um, I use price action, I guess, a lot when it comes to my structure. Okay, and I don't know if you guys have read the Japanese Candlestick Bible or any kind of book on price action, but if you haven't, I highly recommend it. It's something that honestly, I believe has helped me excel in my career as far as, understanding what the market is doing. The candles tell everything. You know what I'm saying? They do. They tell everything. So if this candle closes like this at 9:45, this is a hammer, guys. And then this next 9:45 to 10 o'clock candle should be booming the heck up. Also, this 50 moving average is like a trend line. It's like it acts as either support or resistance depending on what happened, right? This candle also is the first candle that did the break of structure rule. This is the second candle, and depending on how the next 2 to 3 candles go on this 50-minute candle, that is another break of structure rule that I like. So I'm definitely long on the British pound. I agree with AIRO. It just becomes about when to get in. So I like to see this retracement happen, kind of like on EU in the opposite direction, and then we'll pop that by. Guys, got any questions about that? What's going on, BTC King? My man, D Duncan. What's up, Daniel? Let me see. Good question. So going back to Sherpa, guys, right? Um, if you're long on GBP, that would make EG drop. No, I'm not long on GBP. We're long on Euro on this buy right here. No problem. I'm definitely going to look back at AIRO though on EG because, like I said, we're in the money zone. So, what do you consider a base? Correct. That's a good question. Would you consider basing on the left before going long on EG? Yeah, I would. So, and if I'm thinking about that, right? So we're here, right here, hitting these lows right here, right? And honestly, I need to draw this structure for you guys real quick because now you'll see what this candle is bouncing off of. This is a 3 candle breaker structure. Boom, another bounce, boom, another bounce. 3 candle breaker structure. There's a slight retest to it. Breaker structure, bounce to it. That's wild. um, hey, explain basing for me. What you mean as far as basing for me, real quick. So that way I can answer you properly. And then the ABC 1 through 5 count doesn't necessarily start when the money zone starts. If there's a higher low within the money zone, then yeah, that's what we could go off of. But ooh, here we go. Let's check AIRO. I got an alert. What is that? Those are the indices. NAS 100, Bitcoin buys. We'll take a look at those. All right. So here's our AIRO. This low right here inside this money zone, since this is an actual low, yeah, you can start your regular 1, 2, 3 sideways site 4 and then 5 push up. Excuse me. And then of course in this money zone, if there's a higher low, then yeah, that's where you're going to start your count from. That makes sense. If that helps answer your questions with that. Let me see. Got you. Where's the Q&A at? All right, cool. Got you. Correct. You're exactly right. And that's what I kind of figured. So here's how I look at that actually, right? So as we can see, this is the common, this blue line right here is the common low, right? That this over here was pretty much hitting at, right? Which is perfectly fine. So here's what happens with the market. And because it is at this structure and because you understand that it's at that structure, you should, kind of expect for it to come down low again, right? That's all understandable and that's perfectly normal. Here's where the break of structure rule has been more times than not fine for me, because this candle broke that structure that these right here was bouncing at. So it's already broken into that zone where it would be, I guess, support or resistance, right? This is the resistance that it already broke through. Here's that second candle that retested to it, and here's the third candle. If I go to the 5-minute chart, it might be a 3 candle break of structure, if not even more. First candle, second candle, there's your third, fourth, fifth. So here's how we play this. Even on the 5-minute chart, you can still use Elliott wave, right? If you start from this low, you would get a wave 1, some type of let me see. Let me draw it for you. Oh, I'm sorry. Wave 1, steep wave 2, wave 3, some type of sideways wave 4 before popping up for a wave 5. Now, here's where we don't know where wave 5 is necessarily going to end at just yet, okay? Now with Elliott wave, some of the guidelines say that a couple of the waves should tend towards equality. Since wave 1 and wave 3 have already happened, then that means wave 5 is either going to tend towards equality with wave 3 or with wave 1. We don't necessarily know that just yet. So what I like to do, this is where my fibs come in handy. So I'll fib from this low to this high, because even though this was a single red candle, this is in fact a high because that's an inside return. And I'll let my TPs kind of measure or predetermine where my next leg or move would go to, if that makes sense. And then of course, I let my fib levels determine my stop loss. So the setups that you would be catching, let's say we entered here on this 4 with a pending order, right? My stop loss, guys. My stop loss is going to go at my 618. I never take a trade that's less than 2 to 1. Okay. So I would risk what is this, 10 pips to gain 20 on this one? That's perfectly fine with me. So this would be a short-term scalp for me. Or if I wanted to go with the hour structure and really bang it up, I could really do that. How would you do that, you say, right? You just do the same things, guys, on every time frame. So we measure that. Let me get this off here real quick. All you do, guys, is measure a different part of the cycle, right? Because we know we're looking at this as an ABC retracement, right? So if you entered in down here, look at these setups that you guys will be catching, man. It's pretty crazy. So the 786 is what I like to say is like the sweet spot or like a pending. Uh-oh, get off of there. or like a pending order. All right. This one's a 3-to-1 reward to risk ratio. Still risking about 15 pips to gain about 55. These are the setups that we got that we want to be taking. I don't care if you use a standard. What, you're going to lose $160 roughly to gain what, almost 540 roughly, give or take, depending on what you're on. That's absolutely phenomenal of a setup for me to be taking, right? So yeah, that's how I look at the market, guys. Let me see. Let's get you guys some money though. I'm ready to enter. Let's check out EU real quick. I don't even have it in my watch list. Haha. Would you look at this? Would you look at this right here, guys? Right? So here's how we're going to play this, right? So this is a 15-minute time frame that is at 10 o'clock. It's looking like it's going to lead a spinning top, right? We watch this price action happen, guys, on the 5 minutes, so that way we can actually enter. Okay. Here's what I absolutely am looking for. Let me get this off of here so you guys can see it. Excuse me. In order for me to hit this short, guys, right? I have to see, first of all, you see these wicks towards the top? That's what I want to see. I call that exhaustion. All right. I'm saying this is telling you that price is coming up here and finding resistance. Okay. This is what I want to see. Also, what I'm seeing is this blue line is something that we got from a higher time frame, I believe. This is where the resistance is at, right? That's all, again, something you want to see. So now what I have to see, my third thing, is I want to see the momentum. Okay. I want to see the bear momentum come into play. All right. So when that bear momentum come into play, I want it to be in the form of not anything like a doji or a spinning top. I want it to be in the form of an engulfing or a Maribozu. Those are the candles I prefer, especially these engulfings. These are letting you know and confirming your bias and letting you know, well, shoot, here we go, letting you know which direction you want to be trading within, right? So we're here at this moment right here. Let me drop down to a minute chart so I can kind of go over this price action with you. Now, going back to the 3-candle breaker structure rule, right? I told you guys that 2 of the candles have to be full bodied and full of momentum. Okay. Here's the first candle that broke this structure, this blue line, in a bullish momentum. It was followed by 3 bears. That next bull momentum candle was nowhere near anything like this, and definitely was not even bigger than the prior bearish candle. This is all the price action. This is how I'm reading the price action, guys. Okay. So what I'm looking for now, or what I'm waiting for, is again this 5-minute candle to close, and however it closes, that's what I want to see. All right. After I see that, does that mean I'm necessarily entering? No. It still depends on what type of candle forms right here. Because even if it is an engulfing candle, guess what? That next candle, guys, can still wick up here, which would be the retest of this structure before dropping all the way down. There's a few different steps that I teach you guys on, as far as like what to look for, how to look, and how to pretty much get through it. But this is absolutely what we want to see in order for us to enter that short with AIRO. We wait for the retracement to happen, right? Now it might be ready for us to pop. This would be a corrective double top M on the 5-minute chart. So, see how this candle, whoa, what is this? Is this just really open at 955? Is it my charm is saying 954? What am I missing? And that's weird. All righty. So this candle closed as a quote unquote spinning top, right? In order for us to take this sell setup, guys, we have to let this candle do what it's going to do. Okay, as long as this candle right here, it can close bullish. As long as it doesn't break this structure, it doesn't matter. Okay, so this can close bullish. As long as it doesn't take this top structure, we should see a nice heavy bear candle, which would signify an absolute entry for us. Okay, so we'll let this candle close, and then we'll enter. You guys got any questions so far? Where's that chat? Trying to multitask. I know that's right. Any questions yet? Let me see. Got you. I'm going to look at that EG2 here in a second. So we'll go back to EG. I'm going to go back to the trade for EG. And then we'll enter probably here at 10 o'clock. Oh, yeah, I do get technical, guys. Like I said, I get real technical with it. That doesn't mean I ignore the fundamentals of anything or anything like that, but I like to just get real technical with it, right? Excuse me. That's looking. I love it. I love it. So let's take a look at AIRO at those two charts again. EG and EU. This is EG for 15-minute time frame. We let that retracement happen, right? That should be popping up. Give us some more pips. That's wild. Wild as ever, man. So that's EG. Where did EU go? Excuse me. So here's how I play this, guys. 10 o'clock's about to happen in 2 minutes. I'm on the hour time frame, checking everything out, right? Here's our arrow. Got a bounce. Here's our arrow. It looks like retracement. And now we should be looking for our short, right? It looks to be coming right over here. I'm actually going to pop this short right here on EU, that is. I can't see that with that. Hold on. Yeah, I use a 50 EMA, guys. All right, so I'm entered short on EU. Let's go back to EG real quick. I'll check that out. I'm actually have to hit this long actually right now on EG too. All right. So that's that. Okay, you had. I don't think you had anything for me. Excuse me. Oh, some action going on. 1 hour. We had GU and U Chef. Ooh, check out Nas 100. Here's the AIRO. That's look like it might be going right. That's the 15-minute chart. I'm still going to check this hour because looking at this hour time frame, it's still got a long way to drop. If we go A, B, C, C would come down for me at least to this area. And with that being Nas, guys, so what I'm going to do on this one is if you guys see, there's a lot of wicking towards the low on these bearish candles right here, which is for me to enter in short. That's not something that I want to see. Okay. So what that warrants me to believe is, unless this candle just absolutely falls all the way down to the depths of hell, there's going to be a slight retracement, which will give us a better opportunity to enter. Ooh, but we'll see. I'm at the 10-15 candle. That is wild. What else we looking at? Oh, SP 500, same thing, but it's already in the zone right here. So we might see something else happen with that. That might give us the a different type of a signal. Hold on real quick before I continue. Let me get to these questions. All right, got you. On the EU trade, are we taking it to support on the 1 hour time frame? That's completely up to you. I would say focus on 20, 30 pips and compound the next trade. No problem, no problem. All right, so let me see. I'm just teeter-tottering on some pips right now with EGU and EG. It's perfectly fine. That nice 115 pullback, it might be giving it to us. Might be giving it to us. That is so wild. Let me see. I hate how it has me do that. What strategy do I use for the current open positions? All right, so as far as that, guys, like I use Sherpa with it. For today's purpose, I'm just going to focus on collecting, like I said, 20 to 30 pips, and then going on to the next compound box. But more times than not, I'm going to hold it into my take profit levels that are predetermined by my fibs. So actually, let me show you guys that actually. Which, if you're a new trader, that honestly takes just time to get to, as far as trusting yourself and trusting that it's going to go that direction, right? Because nothing is ever 100% with the market. There's going to be times where my analysis is like this, and then everything looks like it's aligned perfectly, and it still goes against me. That's just the market. We can't control that, right? So, excuse me. I believe we gave a short off the 15-minute time frame on EU, and on that short, I had predetermined that based off the hour, this shade box is where an area that I would hold to take profit, I guess. I fid from this high to this low because this is now a confirmed inside return of this structure right here. So it should pull back, meet some type of resistance, and then continue down to either this take profit or this take profit. Now, depending on where you enter at, I think I entered in right here. You know, that take period is going to be, that's going to give you what, 25 pips. This one's going to give you 42 pips, right? And then depending on where your stop loss is, like I said, you're risking about 15 to 20 pips. So I always try to do the 2-to-1 risk to reward ratio. Hopefully that answered your question. EU is a, let me see. Yeah, we had EU going short off the AIRO call. Let me see. I'll go over it again for you. It was back here on a 15-minute time frame. Oh, well, even on the hour time frame, we got this short right here. 15-minute time frame, the short was right here. And it gave us like a little bit of drawdown, which even with the back strategy says allow for, I believe, 30 to 40 pip drawdown, which is perfectly fine. We should honestly see it find some resistance at this moving average and then popping it low. So I don't mind a little bit of drawdown right now. I could have swore I had that up there. So we'll get that off of there. Is there anything specific that you guys want me to look at? If not, I'm just going to keep going through the charts. Let's see. Close you out. All right, cool. So I'm gonna just keep going. You guys can chime in whenever you want to. On CAD JPY, UCAD and gold. Okay, yeah, let's talk about that. We'll start with UCAD. And to talk about that, I'll go to TradingView. I just like it a little bit better as far as my eyes. CAD and gold. Actually, CAD is one that I actually trade. So whenever I approach a new currency pair, guys, I'm going to give you guys how I do it with Sherpa this time. I always start out with the daily time frames because I like to see what at least what the current day's momentum is doing and what has the past few days been doing, right? Excuse me. So these three blue lines, guys, let me label this for you. Again, this is a part of the quarters theory. And this has to do with like institutional structure and institutional price points. So it gives you market structure based off of price points and not necessarily just going off of these candles. I really want to mark up a chart for you guys from start to beginning, so that way you guys can kind of see how strong some of this stuff is. If you guys don't mind that, I'll gladly do that for you because it can be a little bit time consuming, but I think it'd be nice to show you guys. You all can kind of see how everything goes. Get off that hesitation zone. 125 pip half point. And then this is last whole number appreciating next quarter point, which also happens to be a monthly key, key level. Okay. All right. So let me start with the quarter series and introduce you guys to it real quick. I'm gonna give you a brief little synopsis over it. Okay. So what the quarters theory does or what it's about. It's a theory that says price doesn't necessarily move randomly, but it moves in 1,000 pip increments systematically and kind of like has targets, because we have to understand that in the bigger picture of things, who is really trading all this stuff? Large institutions, right? These institutions don't necessarily have just random numbers or random targets that they want to hit. Okay. They've got precise numbers. And so what the quarters theory does is it will break up the price into 1,000 pip zones. So from this white line to this white line, that's exactly 1,000 pips. Okay. And it breaks it up into 4 quarters, right? So each quarter from this white line to this white line, that's 250 pips. From this line to this line, another 250, and so forth. That's where the quarters theory comes from. Now, it goes further in depth, guys, and gives you guys and gives you guys characteristics of movement, of the price movements when it comes to different price levels, and how to judge what the market will do based on how it, of course, interacts with those different price levels as well. Um, so we've already got this broken down into the 250 pips, right? We've got this broken down to the 250 pips. Now I'm on the daily time frame. Within those 250 pips, from this line to this line, there's 3 more important price levels. And these price levels act as either support or resistance, depending on the trend. So since this is a bearish trend, from this white line to this blue line is what is called a 75 pip hesitation zone. So since price broke that 75 pip hesitation zone, based on quarters theory, I'm to expect price to complete or to touch near this next quarter point, which in fact it did. Okay. Not only that, here's a 3 candle breaker structure, right? You got your first candle, second candle came and tested it. Here's your third candle. On the pullback, guess where it came to? That structure that was the 3 candle breaker structure. Cool. We've got that understanding. Now, the next important price point inside these quarters theories or inside these quarters levels is the 125 pip half point zone. If you pay attention over here, guess what? You see how price is reacting to this price point. And these price points are nice, round, whole, even numbers. Because I personally, along with the quarters theory, don't believe these institutions are going to say, hey, let's take profit at $1.22 or 22 cents, 134 pips type things. No, they're going to use nice, even, whole, or round numbers. So the third important price level inside of this 250 pip range is the last whole number preceding this quarter point right here. And as you guys can see, look at it, that support. Now, this isn't something that I made up. This actually has been around since 1982, guys. And it's something I've been studying for probably like the last 3 or 4 years. And it's something that I use as part of Sherpa. It actually absolutely helps me kill the market. For instance, back in January, at the beginning of the year, I was able to call almost every single Bitcoin move thanks to just using quarters theory. And it was pretty amazing. So I've just been, I stick with it because it absolutely works for me. So that's just a little synopsis as far as quarters theory, guys. Now we are on the dollar time, or not the dollar, the 1 day, right? The daily time frame. We are talking about the Canadian dollar and the United States dollar. I do notice that there's a lot of news bubbles right here. So what I want to take a look at is I'm going to see what kind of news releases there are that are coming up. All right, and let me see. I don't know which news sites that you guys use. I just keep it simple. I use Forex Factory, and then this side of it actually gets more to like understanding fundamental analysis. But regardless, since there's news, I want to be aware of what type of news is going to be released, right? Also, for instance, this has to do with crude oil inventories, which is absolutely phenomenal. Um, Even though because there's 2 ways to play this, guys. At 10:30, this is a orange folder, so it means it should have some kind of heavy impact on the United States dollar. But since we're looking at the United States dollar and versus the Canadian dollar, you have to understand that the Canadian dollar is pegged to what? Oil. So this is also going to heavily affect the Canadian dollar. Now, I'm not going to get into the whole fundamental analysis on that or anything like that today, guys, but understand that this is part of the fundamental analysis portion of actually, speculating a currency pair. You have to be aware of these things. Okay. And then once we get into like, further into education and stuff like that, we will, or I will try to teach you guys how to do like a basic fundamental analysis as far as how to use these numbers, what they actually mean, and things of the sort. Because you guys can actually see a trend, right? As far as like a trend. And not only that, crude oil inventories. We're talking about oil, right? You can probably look at like I don't know, maybe a crude oil price chart or something like that, just to see how it's been performing lately, right? If you wanted to, but I'm not going to go into all that today. So what I have to focus on now to speculate on the Canadian dollar, guys, is I have to pick out a structure chart. And my structure comes from three time frames, either the 1 hour, the 4 hour, or the daily. And by doing so, that also is going to predetermine what type of trade I'm even speculating. If I see my structure on the daily, then that's going to be a position type of trade. If it's on the 4 hour, that's more of a swing type of trade. If it's on the 1 hour, that's more of an intraday or a short-term scalp. Now, does that mean necessarily that if I see a setup on the daily or the 4 hour, that I absolutely have to hold it for that whole duration? Absolutely not. But you have to understand that because it is on that time frame, it may take a little bit longer to set up. So you may not have the patience. Okay. Now, my daily structure is already, highlighted right here, right? My structure is already highlighted. I already see where we're at. So now I'm going to go to where do I see my market cycle the clearest, like my Elliott wave and things like that. I can start from this high and go to this low and try to count my Elliott wave if I wanted to, or I could use this same structure and I can go from this high to this low. Remember, we're trying to take a trade sooner than later. So I'm going to start from this high to this low. Notice this is a retracement. Go from this high to this low. This is a slight retracement. High to low, slight retracement. What happens though? A low, higher low, a higher low. What happened at the second higher low, guys? A nice engulfing candle. So here's what we have. Multiple hits, guys, to this low or to this structure right here, pretty much, that never produce any type of bear pressure afterwards. Okay, so you can kind of signify or look at this as a reversal. If I draw a trend line, I can go from up here, I can go wick to wick, draw it down. Here's my break of this trend line already, right? So here's a break of structure, here's a bounce, now it's going. Here's another retest or a retracement, and we can still probably go long. That's my 4 hour structure. I still take a look at my 1 hour, guys, because again, I like to see things clearer. If the 4 hours isn't as clear for me, guess what? There's other time frames for me to look at. And all I'm trying to identify is structure that I want to take a trade off of. Okay, that's what I'm looking for. And so this is structure that this is shorting off of, right? What I can do now is go from this low to this high. And here's what I recommend, or here's what I recognize already. Wave 1, wave 2 was a sideways move. Wave 3 is looking to be the steep move as it should. And then wave 4 might be that deep type of retracement, which would produce a wave 5 up. Again, wave 5 might be that complex type of wave, which would match the length or the size of wave 3. And to kind of judge that, we can fib just that portion from this low to this high, let this retracement happen, and then boom, pop it in there. So notice though, before I even put these fibs on here, predetermined kind of where I would expect, swing points or things to hit, right? This wave four, I expect to hit at this structure. Excuse me. This wave four, this is all structure right here that I expect, or potential structure wave four could come down to give us that retracement with before giving us the entry to pop it all the way up here. Is that a good setup? I don't know. Again, guys, what kind of setups do I like to trade? 2-to-1 risk reward ratio. So if I'm expecting it to come down there, I'll put it right there for right now, and then I'll look at this. This is almost a 3-to-1 reward to risk ratio. Perfectly fine. I'm cool with that. So what I would do, I would set a pending order right here at my 618 with this structure, set my stop loss with my predetermined fib setting, and then set my take profit all the way up here. And then I would go on about my day. That's my set and forget, guys. I'm not going to chart watch it. I'm not going to do none of that. I'm not going to tie my emotions up into the markets like that. I've been there, done that. And it is not pretty. I will tell you that. So that's what I've got for UCAD, right? As I'm speculating it to go long. It's just not there just yet. So we're entering the wave 4 portion, and then we'll pop it long. So what you could do, if you don't like pending orders, set your price alert, right? Set your price alert on TradingView, somewhere around it. Add alert for US CAD, boom, boom, boom. So that when price gets near it, guess what? You'll get an alert to come to this chart. Take a look at it, see what's going on. So until it gets in this area, I don't go into the lower time frames. Okay. I just don't. Let me see. And also, even looking at this time frame, you have a small wave 1, wave 2, wave 3, wave 4, wave 5, before what it looks to be like an A, you see a B, and then C come down. Got any questions about UCAD? Where'd you go? I'll have to take a look at EU. EU not playing nice? Let's take a look. Shoo. Yeah, a little bit of drawdown, ain't we? Not playing nice at all. That's okay. This is a move that I expect. Like I expected that retracement. So as long as it doesn't really, like I said, break above that structure, guys, you're still good for that short. An AIRO we trust, right? Let's check out EG. Let's see what EG is doing. Excuse me. It's giving us that retracement for another opportunity to enter possibly. Let me take a look. All right. So this shade zone, guys, is my absolutely favorite zone to enter in. Sometimes they don't always get all the way down there, but they are. I mean, but it is my favorite area. In between the 618 and the 886. Of course, the 886 and the 786, those are 2 fib levels that you'll have to add if you don't already have them. No problem, no problem. Thank you. This was very helpful for my Givebox account. Oh, hey, no problem, Michelle. Let me see. Let's check out AIRO again. See what's going on the AIRO. Hasn't popped out any more alerts. Let's see. Let's see. Let's see. Oh, a lot of alerts. So we're going to look at gold, Bitcoin, and how you analyze AIRO with fibs. It's a good question. All right. So sorry, I got a phone call right there. Get back in there. All right. What are we looking at? Gold, Bitcoin, and then analyzing AIRO using the fibs. Okay. So let's take a look at gold real quick. Calm down. Actually, I think I have gold on my watch list. Okay. So we'll check out gold and then we'll check out Bitcoin. And while I'm doing that, I'll try to show you how to, I guess, use fibs with AIRO and stuff like that. All right. So here we are on the daily chart with gold. Okay. Excuse me. Notice though that I don't have, that doesn't even look right. I don't have no kind of like market structure on here. Oh, okay, that's right. All right, so what I have to do is put, so from this line to this line, 250 pips, right? I have to identify those three important price points. My half point, my hesitation zone, and then the last whole number preceding. So already the last whole number preceding is 1980, preceding this one right here. And to confirm that, if we look at this structure right here, it's right at 1980. So that's one. Next is the 125 half point, which is going to be at what, 1875. And notice, guys, I'm not going off the candles. I'm going off the price. But what I want you guys to pay attention is how are these candles reacting to these levels, right? I haven't gone off of these candles. There's no coming to it and picking up the swing high and low. No, I'm going off the price. And these candles react off of these price levels, right? Cool. So again, I got the, oh man, I got the whole number preceding the next quarter point because this is a bull trend. I've got this 125 pip halfway point, and then I can do a 75 pip hesitation zone, but it's already way above that. I'll delineate it for you already, just in case, if you can't see it, which is going to be right there at 1825. So I need you guys to see how price or these candles are reacting to these lines, and I haven't gone off nothing but institutional price, right? It's pretty crazy. 3 candle breaker structure, 3 candle breaker structure, 3 candle breaker structure, 3 candle breaker structure. Like, it's crazy, right? It helps me see the market so much clearer when I do it this way, which is absolutely amazing. So here's how I do this, right? So we're on a bull trend right here. So I'm going to start from this low and go to where this current high is. Okay. And as you all know, I like to start or try to identify Elliott wave first. And to do so, I always start with the, I appreciate that, Steve. And what I like to do is identify the market retracements first. Okay, so if you ever try to use Elliott wave and get stuck, try to identify the market retracements first, because there's a guideline that says if wave two, or if wave two is a steep retracement, the next retracement that follows should be a shallow or like a sideways consolidation. And then it switches that. If wave two is a shallow and sideways consolidation, the wave four should be more of a steep. Okay. Now let me point this out to you guys again, right? So here's the low, wave one. Wave two was this steep one. Okay. Wave three, wave, wait a minute. It went off for me. Hold on. 1, 2, 3, 4. Now we're at wave 5. Where waves 5 and 3 almost tend towards equality. Wave 2 was a steep one. Wave 4 was a sideways consolidation. So anytime after this, guys, a 5-wave move like this comes some type of retracement, whether it's going to be a deep retracement or just a extended type of complex sideways consolidation. Okay, we just have to let it happen. Now, since this itself is a 5-wave move, I expect a retracement to go, or some type of retracement to go down. Okay, we see this high over here. This is kind of pretty close to setting a, I guess, a lower high if we go to a lower time frame. But still, I could feel from that high to low just to see where we are within the market, right? And I always say I like to enter in between a specific zone, in between the 618 and the 886. Right now, we are at the 786, which is where my pending orders actually go. Okay. So if I had a pending order right here, I would be short on gold right now. Just in a little bit of drawdown though. So does that mean I'm done analyzing this chart or anything like that? No, I'm still going to go to a 4-hour and see which one do I see the clearest. Now, already though, what I do identify as far as price action is this engulfing candle on the 4-hour. That's absolutely something that you want to see, guys, if you want to enter a trade. It's either an engulfing candle or a Maribozu. Those are some of the strongest price action telltale signs of where the market is wanting to go. Does that mean you enter as soon as you see this candle after it closes? No, not necessarily. Because more times than not, there still would be a bull type of candle that will come to retest some type of structure that this candle actually broke. All right. So let me highlight this and I can show it to you guys. All right. So get that off of there. Get that off of there. Let's go to the 1-hour. Let me see. Now, this candle has a lot of volume and a lot of momentum. Okay, but notice it hasn't broke this structure. All right, so now we've got this pullback. As long as this pullback doesn't necessarily get above this structure right here that this candle broke, you could identify this or look this as kind of like an inside return or retracement for you to pop it down short again. Again, this is on the hour time frame, something that we want to see. Okay, so what I'm going to do, I'm going to use this time frame as my structure chart. Okay, so this is my first chart that I'm picking out of. From there, I'll go to the 15-minute time frame, so that way I can look for my entry setup. All right. All right, let me see. 3 candle breaking structure, retested this line. It kept going long. Kept going short. Now we've got another pullback that's coming to this 50 EMA. This is a crucial area. There's some news coming up. We already have some news releases coming up. Crude oil inventories, right? That's going to affect the dollar. And depending on what the dollar does, you may have a slight correlation on gold. Long story short, though, I think I still might be short on gold. Excuse me. Let me find it. here at 10:45, once this current candle closes, I'll have my bias is short, but I want to see what happens with this current candle because it's at this resistance right now, that with the 50 EMA, and we just want to be sure that it's not going to continue to pop up before continuing short. I already see one tap, two tap, three taps to the high. That third tap gave us an engulfing candle, which left us with another break and structure rule, which is everything we want to see to confirm a short. So here, even here on the 15-minute time frame, we can still fib from that high to that low, and then again, let price retrace to wherever it should, and then market execute or set you a pending. So in essence, guys, it's really the same process that I'm repeating on just 3 different time frames. Look at Bitcoin. I'll look at Bitcoin, and then how do I analyze AIRO with the fibs? That's what we'll check out. You guys got any questions just yet? And again, Steve, I appreciate that. Yeah, and guys, I know I'm kind of going over some advanced techniques and stuff like that, guys. And I haven't given you guys too much detail. But I promise you, it's not. Oh, hey, look at that. Remember that alert on UCAD? Let's check it out. That is absolutely wild. Look at this, right? So, how do we react to the situation? The same. We stay even kill. We already know what we're expecting to do. All this is just an inside return. I have already identified it on the higher time frame, right? As what? Just an inside return. A wave 4, right? Wave 4 should be steep. Wave 2 was sideways. So wave 4 should be the steep. Excuse me. Hey, no problem. No problem. So we'll look at Bitcoin here in just a second. I just wanted to see what that price alert was. And then honestly, it hit the price alert to let us know that it dropped a little bit deeper. Give us the discount price for an entry. Let me drop to the 15 and the 5. Okay, so how am I looking at this stuff, guys, right? Or how do I look at this short right here? One-hour structure is what we're going off of. That's what's here in the yellow. 15 is the entry setup, which the entry setup would be if you fib from this retracement from this low to high. Okay. Price comes in between the 618 and the 886, right? This is my entry zone, my favorite area to enter before popping it long. And then going long to where? If you're scalping it, you can use these two TPs, or you can use the 1-hour time frame that we had, the 1-hour structure that we had set up. So, but yeah, it's here's what to expect, guys, inside this zone. So what you want to see is, you see how this candle's wicking. You want to start to see candles, the bear candles, lose their momentum. You want to see them not have the full bodies like this. You want to see them start to have smaller bodies, like these over here, right? Even something like this. Okay. You want to start to see that momentum dwindle and die down. Not only that, on the bull candles, you want to see them start to pick up their momentum, and then not leave any wicks towards the high. Now, a little wick to the high, that's perfectly fine. That's normal. That's natural. But a huge wick to the high, that's not something that you want to really see. Um, so yeah, definitely long on UK. All right, now let's go to Bitcoin, and let me see Bitcoin. All right, so we're looking for chart, right? Again, quarter theory has already been marked up on here, guys. Um, and it's pretty crazy. This is how I was able to call all the way from, I believe, January, guys. Like, these are the moves that I was catching in January. Let me zoom in on the daily. Just thanks to quarter series. On my Facebook page, you guys can see how I have this marked up to the T on every Bitcoin move on my Facebook page, um, which is pretty amazing because I had it going up to 60. I was talking to my guy Miguel about it a little bit too, and a couple of other people. Um, it was just phenomenal. But let's see what it's doing right now. So how do I use all this, right? So first and foremost, again, I'm starting with the daily time frame, and I'm looking at the bigger picture. Okay, I want to see. Oh, my word of advice is whatever time frame you guys are on, even if you click on multiple time frames, begin with the bigger picture or the bigger trend, because that's going to help you get your cycle down right. All right. So what do I mean by that necessarily? So if I start from this low and go up to this high, there's going to be this A, B, C retracement. Now, is there a perfect Elliott wave right here? Absolutely not. Nothing that I can clearly identify. Even if I go from here up, another retracement, up, another retracement, and up, that's not a perfect Elliott wave. So wave one was the extended. Wave two was kind of the steep. Wave three didn't really go anywhere. Wave four, and then wave five didn't go anywhere. You got one bump to the high, second push to the high, your third push to the high. That's how I would identify this Elliott wave pattern right here. Um, After that Elliott wave, we've got this A, B, C retracement. But notice though, this C retracement actually did what? Broke the low of wave four and broke the low of wave two, which would signify that we are in either one of two things, either a bigger type of retracement in a higher time frame, possibly, right? If we look at this, going from possibly either this low up or even this low up, okay? Ooh, you know what? Now that I absolutely have done that, that's exactly what the heck is. All right. So, mm, how do we do this like this real quick? Absolutely, absolutely wild, man. So check this out, guys. Even starting from this low on the bigger image of stuff, right? The bigger picture. This is what I mean by the bigger picture. I always have to be aware of what's going on the higher time frames. Now, let's go back to normal. Hopefully you guys see this. This is the A, B, C move. On this higher time frame, though, guess what? It didn't break the lower wave four. But so that would warrant this move down here, this ABC retracement down here that did break this structure. This is just part of a bigger structure cycle. I mean, part of the bigger market cycle. Okay. So does that mean it's a trend reversal? We have to look at that as a possibility, because even though on the weekly time frame, and this is like super way out in front of us, even though this is an ABC retracement, we are still guaranteed a bull run up, guys, to test this structure right here at the low of wave A. Still guaranteed. That's just the way the cycle works. That's how I can guarantee it, right? And even if that guarantee comes from this week and then maybe the next week or two, you're still gonna have a retest to this. All right. So what that looks like on the daily though, shoot, that could give us a lot of pips. A lot of pips, right? Shoot, that's a lot. Now, let me uh let me clean some of this up for you guys. And then we'll get into trying to take a trade on this thing. All right. So again, guys, I like to use price action, right? And the price action over here is telling me that price found support right here at this midpoint. Not only that, it actually came down here and pinned to this monthly key level, which signified that it completed this full 1,000 pip range before reversing. Okay. Now, off of this midpoint right here, you got this engulfing, this being top or a doji, and today's current candle. Today's current candle, if it is a full body candle and closes above this monthly key level, this candle, and this candle would be satisfactory for my 3 candle break of structure rule, meaning this structure right here. So let's go to the 4 hour. Oh no, I'm getting rained on. Hold on, y'all. Let me move. Y'all have any questions for me while I'm moving inside? Oh, all right. Excuse me, guys. All right. So my Facebook name is Corey Collier, guys. Let me type it out there for you. Corey Collier on Facebook. And Wallace underscore, I think it's Ferragamo on IG. See, I'm always dropping some type of nuggets for you guys. All right, so here on Bitcoin, guys, we're on the 4 hour time frame, right? Started out on the daily, kind of lost my train of thought. We see that it's at this monthly key level. Since this is below that, we have to use that monthly key level as resistance, right? So now it becomes about, again, reading price action, using the 3 candle breaker structure rule and things of a sort like that. So far, it looks like it's stalled out, okay? This is a high, but in order for this to be a breaker structure of this high, that 3 candle breaker structure rule isn't there. So we honestly are probably going to see this reverse, come down, give us another entry for a buy opportunity. But I've got it. Let me drop down one more time frame just to confirm. I definitely got it going a little bit bearish, guys, temporarily, even if it is just to test this this key level down or this quarter point down here. And the reason why I'm saying that is because we see these highs over here. Okay, this is a lower high than that. This, even though this candle broke the structure, it's not that breaker structure rule. It didn't follow that breaker structure rule. In fact, you had it come right back down to that zone. So any kind of pressure up, I would expect it not to even break above this white line for me to get it in for another entry. So because I'm looking at it like that here on the hour time frame, I can use that as my structure. Drop down to a 15-minute time frame and begin to read the price action. see. Yeah, I'll look at gold here just a second. Just got an alert on 5 minute for a sell. Was that on Bitcoin, Jocelyn? I don't know. It might have been on Bitcoin. Yep. All right, cool. Let's take a look at the 5 minute real quick. That's why I like dropping down. So look, check it out though. So if you feel from this high to this low, guys, right? There's a break of structure right here, and this would be the retracement. Okay. Now she said she got a sell alert, which I absolutely agree with that. As we've been covering it, right? From going from the 4 hour, I told you guys, hey, this is resistance. We probably should be on the short side, even if it just goes down to like right here or right here. That's 4 hours on Bitcoin. That's going to warrant you guys a lot of pips. Going to the 1 hour time frame, I told you guys, yeah, this candle did come up here. It broke this structure, but it didn't follow the 3 candle rule, right? So it reversed, and now it's back within the same zone. Any kind of bull pressure up would be warrant for us to, take note of, but we shouldn't expect it to break above this high, which would give us another opportunity to go short. So 1 hour structure, 15 minute setup or entry time frame, right? Excuse me. So off of this candle pattern right here, you've got from this high to the low, this is just an inside return. Any type of inside return is going to be an ABC or some type of complex pattern, something like this, right? That's what I'm looking for on the 15 minute time frame. Now that alert came from the 5 minute time frame. It might not even get up here, right? C might just come right here with this structure. We don't know. We just have to let that happen and react to it accordingly. Okay. So let whatever is currently happening happen, but understand that in order for us to go short on these bear candles, we don't want them to be small body like this. Okay. We want them to be full body like this, engulfing. Okay. And like this. So just let whatever is currently happening. Now, if this closes as a hammer, and then after that hammer, that next 5 minute closes bearish, man, pop that sell, please. Because it's going to reward you. I will say that. Let me take a look at gold real quick. Yeah, okay. We had a short bias on gold earlier based off of 1 hour structure. As we can see right here, I wanted to see it come deeper, but again, like I said, sometimes it doesn't come that deep. It definitely didn't break above this.